A silent shift is moving through the global financial system and most people do not see it yet. Experts warn that the world may be entering a new kind of war, and this one is not fought with guns, tanks, or missiles. It is fought with money, with currencies, with capital flows, and with control over where wealth can move and where it cannot. This growing tension has a name that sounds almost unreal, but is now being used more often in serious discussions among economists and investors: a capital war. This is a battle where nations try to protect their own economies by controlling money, restricting investments, freezing assets, and reshaping the rules of global finance. In this quiet struggle, borders are not crossed by armies but by digital transactions, sanctions, policy decisions, and sudden financial restrictions that can change markets overnight. Gold, an asset that many people think belongs to the past, is suddenly back at the center of attention in this modern financial conflict. In this video, you will learn what a capital war really means in simple terms, why respected investors and financial thinkers are warning about it, how rising global debt, sanctions, and currency pressure are setting the stage for this new form of conflict, and why gold is once again being called the safest place to protect wealth when uncertainty rises. You will understand why central banks around the world are buying more gold than they have in decades, why some countries are trying to reduce their dependence on foreign currencies, and why investors are slowly shifting their mindset from chasing high returns to protecting what they already have. You will also discover lesser-known events and patterns from recent years that show how money itself is becoming a tool of power between nations, and how this shift affects ordinary people more than they realize. This is not a story about fear but about awareness, because when the rules of the financial system begin to change, those who understand early are in a better position to stay protected. As you watch, the pieces will come together, showing how economic pressure, geopolitical tension, rising inflation, and unstable currencies are all linked to one simple idea: when trust in the system weakens, people look for something that cannot be printed, frozen, or easily controlled. That is where gold enters the picture again, not as a symbol of the past but as a response to the uncertainty of the present. By the end of this video, you will clearly see why gold is being viewed not as an old-fashioned investment but as a form of financial insurance in a time when the global order is slowly shifting. Stay with this video until the end, because each part will connect to the next and reveal how this quiet financial struggle is already shaping markets, policies, and decisions across the world, and why understanding this now could change the way you think about money, safety, and long-term protection. Welcome to our channel, where we break down complex financial changes into simple ideas, and if you want to stay informed about the forces that shape your money and your future, make sure to subscribe and join us for more insights like this. A capital war is not a war with soldiers, weapons, or explosions, yet its impact can be just as powerful on people's lives, savings, and future plans. It is a conflict where countries and powerful financial players compete over money, over control of currencies, and over who holds influence in the global financial system. In this kind of struggle, the battlefield is made of policies, interest rates, sanctions, trade rules, banking access, and the movement of capital across borders. It happens when nations begin to protect their own financial interests more aggressively, sometimes at the cost of global cooperation. Instead of fighting for land, they fight for financial advantage. Instead of seizing territory, they restrict access to money, block transactions, freeze assets, and change the rules that guide investments. This is why it is called a capital war, because capital itself becomes the main tool of power. Investors, governments, and institutions all become part of this quiet contest, often without realizing how deeply it can affect markets and daily life. When trust between nations weakens, financial decisions start to become defensive rather than cooperative, and this creates pressure in the system that can lead to sudden market shifts, currency swings, and unexpected policy moves that catch people off guard. Markets are built on confidence, and when confidence begins to crack at the global level, money starts to move in unusual ways. Large investors become cautious, countries begin to rethink where they store their reserves, Access to global banking systems can become uncertain for some regions. Sanctions and financial restrictions become more common tools in international disputes. All of this adds tension to the system, and that tension can quickly show up in stock markets, bond markets, and currency values. What may look like a normal market correction on the surface can sometimes be linked to deeper struggles over financial control happening behind the scenes. This is why understanding the idea of a capital war is important, because it explains why financial systems that once looked stable can suddenly feel fragile. It also explains why money begins to flow toward assets that are seen as safer and more independent from political decisions. Some of the world's most respected investors and thinkers have started to talk openly about this risk. Ray Dalio, a billionaire investor known for studying long cycles of history, has warned that the world is getting closer to this kind of conflict. His concern is not based on a single event, but on patterns that repeat over time. He points to rising global debt that many countries struggle to manage, growing distrust between major powers, and increasing competition over economic dominance. When debt levels rise too high, governments often need to make difficult choices that can weaken their currencies or limit financial freedom. At the same time, when nations do not trust each other, they begin to protect themselves by tightening control over money flows and financial systems. This creates an environment where capital can be restricted, taxed, or used as a weapon in political and economic disputes. Financial competition between countries is no longer only about trade or technology. It is now also about currency strength, control over payment systems, and influence in global banking networks. Some countries are trying to reduce their reliance on foreign currencies. Others are building alternative systems to move money without depending on traditional global networks. These actions may seem technical, but they are signs that the financial world is becoming more divided. When this division grows, the free movement of capital that once supported global growth begins to slow down. Investors notice this change, and when they do, they start to look for ways to protect their wealth from uncertainty. This is where the idea of a safe haven becomes important. A safe haven is not an asset that promises high returns or quick profits. It is an asset that helps preserve value when markets become unstable and fear spreads through the financial system. It is something people turn to when they want safety rather than growth. For centuries, gold has played this role. Long before modern currencies existed, gold was used as a store of value because it was rare, durable, and widely accepted. Even when paper currencies rose and financial systems became more advanced, gold never lost its reputation as a place of protection during uncertain times. When currencies weaken or trust in financial institutions drops, gold often becomes more attractive because it does not depend on any one government or policy. Gold's strength as a safe haven comes from its independence. It cannot be printed like paper money. Its supply grows slowly and predictably through mining. It is recognized around the world and has been valued by different civilizations for thousands of years. When financial systems face stress, these qualities become very important. People start to ask which assets can survive policy changes, currency devaluations, and financial restrictions. Gold often stands out because it exists outside the digital and political systems that can be controlled or limited. In recent years, the demand for gold has not only come from individual investors, but also from central banks. Many central banks around the world have increased their gold reserves. This is a strong signal because central banks are responsible for protecting the financial stability of their countries. When they choose to hold more gold, it suggests that they see value in having an asset that is not tied to another country's currency or financial system. This trend has been growing steadily, and it reflects a broader shift in thinking about financial safety. At the same time, private investors are also turning to gold as uncertainty grows. Inflation concerns, currency fluctuations, and geopolitical tensions all contribute to this interest. Even though gold prices can move up and down in the short term, its long-term role as a store of value remains respected. People who buy gold often do not expect rapid gains. They see it as a form of insurance for their wealth, something that can hold value when other assets struggle. This growing demand from both institutions and individuals shows that gold's reputation as a safe haven is not fading. Instead, it is becoming more relevant in a world where financial systems are under pressure from debt, distrust, and competition. The idea of a capital war helps explain why this shift is happening. When money itself becomes part of global conflict, assets that stand outside that conflict begin to look more attractive. Gold fits that description in a way that few other assets can. As these trends continue, markets may respond in ways that seem confusing without this context. Sudden shifts in currency values, changes in investment flows, and rising interest in traditional stores of value are all connected to the same underlying tension. Understanding the concept of a capital war and the role of gold within it helps make sense of these changes and shows why many experts believe this quiet financial struggle is already shaping the world in important ways. Gold holds value for reasons that are simple to understand yet powerful in their effect. Gold cannot be printed by any government, central bank, or authority. Paper money can be created in large amounts within seconds, but gold must be mined from the earth through slow and costly work. This difference changes everything. When too much paper money is printed, its value can fall because there is more of it in circulation. Gold does not face this problem because its supply grows very slowly over time. This limited supply creates natural scarcity, and scarcity supports value. At the same time, gold has global demand. It is desired not only for investment but also for jewelry, technology, and reserves held by central banks. This wide demand from many parts of the world gives gold a unique position that does not depend on the strength of one single economy. Unlike banknotes, no country can suddenly decide to reduce the value of gold by policy. A government can change the value of its currency, but it cannot change the nature of gold. This independence makes gold strong in times when currencies face pressure. When markets crash, many assets lose value quickly. Stocks depend on company performance, investor confidence, and economic growth. Bonds depend on interest rates and trust in governments or corporations. During financial stress, these factors can weaken at the same time. When that happens, stock prices can fall sharply and bond values can become uncertain. Gold behaves differently in such periods. Instead of falling with other assets, gold often keeps its value or even rises. This happens because investors move their money into assets that feel safer when fear spreads through the market. Gold becomes attractive because it is not tied to corporate profits, government debt, or economic cycles in the same way. For this reason, many people call gold insurance for money. Insurance is not meant to create profit every day. It is meant to provide protection when things go wrong. Gold serves a similar purpose in a financial portfolio. For everyday people, this idea has practical meaning. Regular investors watch gold not because they expect it to double in price quickly, but because they want to protect the value of what they already have. Inflation can slowly reduce the purchasing power of savings. Currency changes can affect how far money can go. Economic instability can create fear about jobs, markets, and investments. In such situations, gold offers a sense of stability. It is a tool for preserving wealth rather than chasing rapid growth. This makes it attractive to people who want balance and protection in uncertain times. Gold is often used as a hedge against inflation. When prices of goods and services rise, the value of paper money falls in real terms. Gold, however, tends to keep pace with rising prices over long periods. This means that while cash may lose buying power, gold can help maintain it. This is why many investors include gold as part of a diversified approach to managing their savings. They do not rely on gold alone, but they see it as an important part of a balanced strategy. Preparing for instability is another reason people turn to gold. Financial markets can be unpredictable. Political decisions can change economic conditions quickly. Global events can affect trade, currencies, and investments without warning. Gold provides a level of independence from these changes. It does not rely on a company's success or a government's policy. It stands on its own as a physical asset with recognized value across the world. This role of gold as a stability tool rather than a profit tool is important to understand. People who expect gold to behave like stocks may feel disappointed during calm market periods when prices do not move much. But during times of stress, gold often proves its value by holding steady while other assets fall. This steady nature is what makes gold unique in the financial world. Over time, history has shown that gold maintains its importance across different economic systems and political environments. Empires have risen and fallen, currencies have changed, and financial systems have evolved, yet gold has continued to hold value. This long record gives confidence to investors who look beyond short-term trends. They see gold as something that has survived many cycles of change and uncertainty. The fact that gold is recognized and valued in almost every country also adds to its strength. It can be bought, sold, and traded across borders without needing the approval of a specific authority. This global acceptance makes gold different from assets that are limited to one market or region. In times when international relations become tense, this feature becomes even more important. For people planning their financial future, gold represents a way to reduce risk. It does not replace other investments, but works alongside them. When stocks perform well, gold may stay quiet. When stocks struggle, gold may provide balance. This relationship helps create stability in a portfolio and reduces the impact of extreme market movements. Gold's limited supply also means that it cannot be suddenly increased to solve economic problems. Governments sometimes print more money to manage crises, but this can weaken the currency over time. Gold does not change in this way. Its steady supply helps maintain its value over long periods. In everyday life, this translates into peace of mind for many investors, knowing that part of their wealth is stored in an asset that is not affected by daily market news, provides comfort. It allows them to think long-term rather than reacting to every market movement. Gold's role as a hedge against uncertainty, inflation, and instability continues to make it relevant in modern financial planning. It remains a tool that people use not for excitement or rapid gains, but for protection and balance in a world where financial conditions can change quickly. A quiet economic conflict is slowly taking shape across the world, not through weapons, but through money, currencies, and control over capital. As trust between nations weakens and financial systems face pressure from debt, policy shifts, and uncertainty, people begin to look for something that can stand outside this struggle. Gold has done exactly that for centuries. It has survived currency collapses, market crashes, wars, and political changes without losing its place as a store of value. That is why, even today in a modern digital financial system, gold is still seen as the safest bet when stability matters more than speed and protection matters more than profit. If this breakdown helped you understand what is happening behind the scenes in the global economy, make sure to subscribe to the channel, like this video, and share it with others who want to stay informed and financially aware.